Good afternoon, everyone. And thank you, Daryl. I appreciate that, and always good to hear from you. Hope you guys are all having a good Wednesday. Quick little audio and video check. Should be looking at Discover the Roadmap for 2025 with David Starr and myself. Great to see you, Pierre, and thank you guys all for taking some time out of your day, a Fed day, no less, to learn about one of my favorite technical indicators. I'm sure you've probably been introduced to a wide variety of technical indicators, but Voodoo lines really are interesting and unique, and I'd like to show you a little bit of what I have learned in using them. Thank you, Paul. Actually, getting right over to that, for those of you that don't know me, again, my name is Henry Gamble. I'm an option trader and a co founder at Simpler Trading, a husband and father to those that you see on the screen there. I focus on day and swing trading utilizing squeezes, gamma analysis, and voodoo lines. Also wanted to make sure everyone was aware that trading actually does involve risk, so I wanted to get a quick little disclaimer out there. But with a little bit of about me and that out of the way, we can get back down into, kind of looking at, if you're anything like me, this is where I started out. I wanted to look at price only, and this is a very clean way of looking at a chart. We can see that there are very clearly some inflection points. Maybe we could apply some ideas to the candlestick patterns, but ultimately it's hard to trade with a naked chart. So from here I started adding indicators, the first of which was the squeeze. I'm sure everyone listening to this broadcast has probably at least been introduced to the squeeze, and that's why this makes this an easy transition, because you're going to be able to use tools that you're already familiar with, and the squeeze was the first technical indicator that I ever truly embraced. Something that I really understood for myself, and it's still a foundational piece of my trading to this day. It's really become such an important piece of my charts that I struggle to look at a chart without it. With the squeeze applied, we can now see the compression and expansion of ranges, essentially the directional movement, and the squeeze does a good job of helping us find these directional moments in time. From here and the ramp that we saw, you start to look at these, and especially this most recent one, very clear that squeezes do have a way of helping us predict that a product is getting ready to move. Now, it's good at doing that, of suggesting movement on the way. It doesn't necessarily do as great in telling you which way it's going to fire, or which way is the path of least resistance. And that's where the voodoo lines come into play. With the voodoo lines added to my chart, I now have a wealth of additional information. We've got squeezes on this. We've got 3 squeezes on this daily chart, and you can see again that they do help find these directional moments in time. However, with the addition of the voodoo lines, now we have a better idea of where it may be headed. We have what David and I refer to as a voodoo roadmap, a map that helps us determine where we are on a chart and where we might be heading. These voodoo roadmaps, these paths that price can follow, provide a way to measure advances and declines in the market. Depending on which levels find support or resistance, we can use that information to pursue opposing or alternate voodoo lines. At the heart of this study, we'll find that fire lines lead to fire lines. That's the biggest picture view of what this indicator offers. But we'll also see that tree lines can lead to tree lines, fire lines can lead to tree lines, and plenty of patterns in between. So let's dive into this by taking a look at a couple examples. While all voodoo lines are simply horizontal levels on a chart, their magic comes in understanding the various degrees of importance. The fire line is the most important, followed by the tree line, then the snow line, and their relationships help us determine which way price may be headed. One of my favorite patterns this indicator can offer is the standard reversal, where price is moving directly into a level and then has an abrupt shift in trend. I'm going to show you that here in this example of McDonald's, but I want to tie it in with a rule of 3. The rule of 3 can be used in all kinds of ways, but I want to share it with you in regards to, making decisions with trades. If we have 3 reasons to do something, it starts providing just more of a foundational reason to really take the trade. 1 is not enough, and 5 or more can start getting into an. So voodoo lines are almost always going to be one of my three in my setups, and this McDonald's chart is a perfect chart or a perfect example of that. So we start with the squeeze. This is the piece of information that I'm usually scanning for, and when I find something is in a squeeze, then I want to pull up the chart and actually lay eyes on it, right? Because voodoo lines really are something that are more visually understood, more so than something that you would scan for, like a squeeze. But I like this example because it utilizes that most important fire line level and shows you how fast a stock can reverse from it. Again, I found this through the squeeze scan, but then I'm looking at it for this failure at the fire line. This is so important because I tell you, in the infancy of my career, I would just study kind of moving averages and think, all right, the squeeze is going to try to fire in the direction of the moving averages. But that's really not complete thinking. See how moving averages are bullish here. McDonald's moves into the fire line, and that is the point of failure. So, this short setup for me was not right at the high. I actually got into this about $12 off of that level. But I can see that we run into the fire line. Then we have the close below the low of the high bar. That's a way of price confirming that resistance is being respected. Those are two pieces. And then, of course, the third being the squeeze. Directional put option. The trade ended up lasting right around 24 hours. We opened it on Tuesday morning, and then we closed it on Wednesday morning. The trade was executed through the purchase of out of the money puts. So typically, when something out of the money moves that quickly in my favor, I'm going to be willing to lock up those short term gains. In this case, the option almost tripled, and it shows us how important those levels can be. So, this is where I took profits in this. But look at how McDonald's goes on to complete the fire line to tree line roadmap. So in this next image, you see essentially over the course of 3 days. Again, the biggest picture is that fire lines move to fire lines, but inside that there will be these other relationships. And in this case, the fire line to tree line was very direct, right? Not only did this move just from the reversal directly into the area that I was targeting, but look at how much it's rebounded since then. If you're holding puts and you're like, all right, I'm just going to hold my puts for waiting for the squeeze to fire, which is one strategy I have worked on, that's just tougher. You see how, again, this was the setup. That is where we covered our short. Again, quoting at 295 is that tree line. And you bottom just pennies away from it. So, this just shows you how important that I have found these studies to be and how critical these inflection points can be for stocks. So after looking at McDonald's, let's try to take a little healthier route and come over and take a look at Apple. What a better symbol to talk about a tree line roadmap than Apple. So let's get into it here. As mentioned earlier, the squeeze is almost always the foundational piece of my setups. So here we're looking at a mature 3-day squeeze in Apple, right? So here is our compression, and you can see that when the squeeze moves into those green dots, that is the signal firing. And you can see the directional move that it provided. So that's what the squeeze can and does do, and that's why I always try to start my studies there. Price will exhibit various personalities at and near these voodoo lines. Again, one of my favorite is that they can be magnetic, and that magnetic personality is often driven by squeezes. So this is our entry, and I think this was, one of the important pieces about being very clear about this, and that is that, this is where I took my entry because I've got the squeeze histogram rolling up. I had a favorable relationship to my moving averages, but I end up having to take, about 7 to 10 days of heat in this. I have an objective way of looking at saying, as long as the tree line is intact, the tree line on the other end of this should be my target. So even though, I didn't happen to have perfect timing on this, it was still one of my better trades because I caught every piece of that. So being involved for those moves, one of my favorite ways to do it, and that's just a great, again, inside fire line to fire line, you will find tree line to tree line. That's a very clear example of that. So we got a lot more to cover. I'm keeping an eye on the broad markets. I see cash is recovering 56. So I'm, if I see something that I want to trade with you guys, y'all will be the first to know. There's a lot of this that you just got to be patient with. We had a negative 1100 tick, now a plus 1000 tick. I mean, it looks bullish to me. I am targeting 5700, but I got to have a setup if I'm actually going to trade it with you. While I keep one eye on the markets, let's take a look at this Meta Fireline roadmap. So in this instance, you can see that that same kind of tree line to tree line has completed, right? This was from 483 up into 538. But this circle is where we get our next round of information. So we're batting back and forth between here for weeks. And then look at that that right there. You could call it 3 days worth. I mean, really it's just the 2 days that is the day that's stuck at the tree line. And then the next day that is such a clear, decisive gap above it, right? When we start to see these relationships where what was resistance is now being cleared in a major and very definitive way, well, then we start the idea of the Fireline roadmap, that anything that stays above this level is targeting this. So that's kind of the foundation of what we start seeing in that chart. And then in an effort to try and time that, right? Because you can look at this and start thinking, all right, this is when we start with that piece of information and we think this is where it's going. But when, right? I mean, it can bounce along the voodoo lines in all kinds of interesting patterns. I become interested in their more imminent paths when the squeezes start to show up. So, this was very similar to the Apple trade in that I started my bullish campaign right here, right? Squeeze moving up, good relationship to the 21 EMA. And there was, several days in that it pulled back. But I give myself a little bit more time in my option. I had, several months in this. And I know that these fire lines have these unique magnetic properties. They very often, can and will be tested. And I usually try to give them space to do so within the scope of the squeeze firing, right? Not to say that I have to have unlimited risk or I just always let it go until expiration, but I want to have that exposure when this signal fires. And there can be a lot of waffling about in that time. So I become very clear with my risk. I wait for this to make its directional transition, and then I look to see if that magnet can be turned on, and the Meta Fireline was a very good target. So in this case, that way of thinking and trying to be patient worked out perfectly. I gave the daily squeeze room to fire, and when it does, the path to 627 was, very quickly underway. It's kind of one of those things where if you're not in, I tend to do better taking a little bit of heat than I do chasing. And then, essentially, again, once that move is underway, it starts to be a very imminent path. So not only did this go on to make a solid push into those targets, but Meta did fail at that level and is actually now back below it. So hopefully this is a clear example of how voodoo lines help us find good targets and then nearly force us to respect the plan and take profits. Once we start to see how sharply they tend to reverse, you'll be less prone to wanting to push positions and more in the phrase of, take a trade, lock it up, take a trade, lock it up, back into cash, and rinse and repeat. So, like I said, that's kind of the main thing that I wanted to show you there in Meta. And then just one more here with this Fireline focus. Check out the action in CrowdStrike. This is where we had a nice bullish squeeze with price above this Fireline back here at 295. Staying above 295 puts the Fireline at 420 as the primary objective. It takes a couple of months, but ultimately that Fireline target is hit, but not until the development of another fresh squeeze. The progressive path above the tree line helps us maintain that bullish view. So in other words, the respect of this, you see how that tree line is acting so good? The fire line, that's obviously a support level. When that is showing us that respect, we start targeting this fire line, but it doesn't go straight up like I drew it right there. It takes time of getting, in this case, see how it just bats in between those tree lines? So that's that relationship of those, how inside it, they're kind of where you're bouncing in between. Staying above this lower one tells us that this path is very likely still intact. While all that noise and bounce is happening, that's where that next daily squeeze starts to compress. And do you see that how that helps us try to time that directional move? And even more so, how these two studies complement each other so well. because squeeze, strong directional movement, voodoo lines help us figure out where it's likely to go, and it truly is one of the most fascinating things I have ever studied. So, these are some of the trades that I've been working on for this. It really has changed my trading life. I always tell David how appreciative I am of him developing and sharing this work. So, I'm going to let him dive into this a little bit deeper and look forward to working with you guys more on these voodoo lines.
Okay, hello everyone, and thank you, Henry. Give me just a second to get my screen set up, and yeah, thanks everyone for joining us today. So, so we're gonna get into what I'm looking for in the remainder of 2025 in just a minute. If you caught our late December webinar, you already know that things are tracking to our expectations for the year. And since that view relies so heavily on the voodoo lines, let's talk about them for a few more minutes. Right. I first started working with Henry and with John Carter back in 2012. I had this indicator that was different from anything else out there, an indicator which plotted important levels on the chart and which provided a roadmap for where prices were going. And with this indicator, the price levels do not change, right? Or at least they change incredibly rarely every few years or so. And so traders can rely on those levels being in the same place day after day. Now, all of the traders in the small group I traded with were already using the tool, and I was faced with a dilemma if I wanted to get it in front of more traders. I could either get into the indicator business, or I could work with somebody already in that business. That second option, the one I chose, allows me to continue to spend my time the way I want to, trading for myself and being with you here today, sharing market insights and figuring out some trades. So I had a plan to make that happen, not just to find a company to work with, but specifically to work with John and Henry. Sure, they had the infrastructure to do what was needed, and I needed that. But more important to me, they're great traders and responsible educators. So you might have heard John tell the story we first met from his perspective about some guy emailing him out of the blue, which I did, right? And the email was very much like our discussion today. I introduced the Voodoo lines. It had some charts for U.S. equity indices, the euro, for gold, and a few other things. And then I wrote what those charts were telling me to expect the market to do next. Now, John gets a ton of these emails, he tells me. And so I sent it off and I heard absolutely nothing. It didn't deter me. That was part of my plan, right? These were the folks I wanted to work with. So I emailed again a few weeks later, citing my prior predictions and showing that markets had moved between the voodoo lines exactly as I had expected them to. And after a few rounds of this, John relented and we scheduled a phone call and everything went forward from there. So um, so after we talked on the phone, I sent him the indicator. He had his tech guy set it up on his computer. It wasn't Henry by that time, right? He got it loaded on his chart, and he sent me an email with this picture, including these annotations he put on it, right? Predicting what he thought was likely to happen next from for the ES futures. That they would, in a few days, travel up to uh, this green line, right? So that was his prediction. I recreated the chart on the same platform so it looks similar. That's exactly what happened, right? And Henry showed you with his examples, right? He had his targets, price moved to them, and then came right back down. Exactly, um, exactly what ended up happening with John's prediction. This is the essence of why so many traders rely on voodoo lines. In any case, we kept talking off and on for a few months before meeting in Austin and trading together for a week before finalizing arrangements to work together and to make voodoo lines available through simpler trading at the end of 2012. Not only have we been working together ever since, but virtually everyone at Simpler Trading uses these voodoo lines to going to and where they're coming from. So let's see how these voodoo lines insights play out with real trades in the market, and that'll lead to my 2025 expectations for gold, right? This is a weekly chart of spot gold that I've got up here. It's my preferred way of watching the precious metal, whether I'm trading it through GLD ETF or gold futures or buying physical gold, right? I regularly try and keep a portion of my investable assets in gold. Um, um, I bought GLD back here in the middle of last year, right? In June. At that time, spot gold was trading near 2,300. Like all my trades in my personal account, this purchase was alerted out in the Voodoo Mastery that Henry and I run together and hang out in daily. I sold the GLD in October for an 18.6% gain. Now, not long term. I told you I try and keep a portion of my investable assets in gold all the time, but just to allow it to pull back, right, as it did before getting back in again. Right? If you catch any of my regular updates, you knew I had been anticipating the move into that level for a while at 2775 in spot gold. And among the many reasons I was looking for it is it was one of these green lines, a voodoo tree line. So um, and that's exactly where it went to. After a few months having established support at a voodoo fire line, one of these red lines, the most important of the voodoo line levels, right? It traveled up to to its tree line, the green level, and the second most important of the levels. And then, as we've seen, it pulled back from there. So at that tree line was an ideal spot to um, to book some profits so that I could buy back GLD lower for the leg to the upside that it's in currently. This should give you at least a little bit of an idea of the power of the voodoo lines, but it's just part of it. So let's dig more into what we can expect from gold, or at least what I'm expecting from gold in 2025, and what the voodoo lines have to say about it. I mentioned that fire lines are the most important levels, and that tree lines are the second most important. And let's spend a minute on what it means to be most important or second most important, because understanding it is essential to building voodoo lines roadmaps, a term that Henry introduced you to, for planning what to expect from the market. It certainly means that both fire lines and tree lines are relatively important levels of support and resistance. These support and resistance properties of all the voodoo lines levels are important. The quote on the slide from a CME floor trader who used to work in the gold pits and used to work in the bond pits sums up the attitude of a lot of market veterans. If you generally know how to trade and you've got good levels to rely on, you can trade just about anything, right? When with the futures pits closed, he now trades for himself from home and he uses voodoo lines for his levels. You can see how the fire lines have been good support right back here. right? And then tree lines are good resistance. Um, Gold then pulls back, right, from that tree line resistance to find snow line support before continuing up through the tree line, right, to fresh new all-time highs. Um, and with that, you can see how price moves systematically from level to level to level. When the voodoo lines are working well, we expect to see more important swings like this large move up originating from more important levels like this voodoo fire line, right? Um, and smaller swings like this move down starting and ending from smaller degree levels. So when gold finds support above a fire line, like it did in the middle of last year, and that is the most important of the levels, it creates a bullish roadmap for a larger leg upwards, potentially all the way to the upper fire line, right? This one that's closer to 3560. Now, that doesn't mean we get all the way to 3560, right? The tree lines in between are still important levels. Each one could be a spot for a pullback or potentially even a reversal. So traders should respect resistance at a fire line like we saw last October. It's a good place to lock up some profit. And if the subsequent move down is just a pullback, as it turned out to be, perhaps finding a support at a snow line like we saw, it keeps the focus upwards. This is how we piece these things together to build a Voodoo Lines roadmap, right? Um, Recognizing that each level has the potential to change what we expect to see uh, next. So gold is actually now most of the way to 3075, 3076 in spot, which is actually or has been my upside target for the year. If we get there, then at that point, I think it will be ripe for a possible reversal after completing not only a move up from this low back in October of 2022, but potentially completing a move up from the 2015 low. Everybody's bullish right now, right? So what makes me so sure that it's going to reverse? Well, actually, I'm not sure at all, and I could be wrong. So you don't need to take my word for it, right? We expect specific voodoo lines behaviors if gold is going to continue up, and specific behaviors if if it's going to do the opposite and start to turn down. So that allows us to build a comprehensive plan for how to trade gold from here. So first, why do I think it's going to run out of gas? And then we'll build the plan for um, uh, how to go um, from here, right? Um, so I use several other tools along with the Voodoo lines. I use Elliott wave analysis. I use Fibonacci analysis. Now you don't need either of those to trade using the Voodoo lines. As you saw from Henry, he combines them with the squeeze and with insights from spot gamma levels, right? Once you know how to read the levels and the Voodoo lines roadmaps, you can combine them with whatever tools you're comfortable with, right? But Elliott Wave tells me that that when the move up from 2022 finishes, right, because it's in the direction of trend, it should have a 1, 2, 3, 4, 5 wave structure, right? Um, the fifth wave, right? So it'll be done whenever this fifth wave, if that is in fact what it is, from the October low finishes up. And because it's in the direction of trend, it too should have a 1, 2, 3, 4, 5 wave structure. So we're close to this having done everything it needs to see the entirety of this move from 2022 completing. And at that point, we would be ready for at least a pullback. Um, so meanwhile, Fibonacci analysis has given us rough targets near that 3075 tree line for several months. None of this means that the advance needs to finish near there. The roadmap tells us that support above the Voodoo tree line keeps the bullish move intact. So if a long-term advance does complete near the target and the trend turns downward, then price will start breaking increasingly higher and higher levels of Voodoo lines and not coming back above them, but bouncing into them for resistance and turning back down, right? So, so it'll first come back through snow lines and then tree lines and finally fire lines. So as long as you have the levels on your chart, you can build an if this then that plan for entering and managing managing trades. For myself, for my trades, I plan to take 20% of my long gold off if we get to that tree line, which is now right only about $25 an ounce above where we're trading right now, right? And then trail up my stops on the remainder, getting them reasonably tight so that if it does start to turn down, I can get out. Meanwhile, if we just continue to push through that tree line, even if I take profit on 20%, if we get pullbacks that hold it, then while I will still have some stops in place below the tree line, I'll just keep sticking with it and see where that continuing uh, roadmap goes, right? So I've had this plan, right? It was the plan I had coming into the year. We're already up 15% on the year in gold. It's having a nice year, and it could go higher, but I'm gonna stick with what got me here, right? Which was buying at fire lines, selling at tree lines, right? Buying on pullbacks to snow lines and selling at tree lines, right? But if we find support above them, to stick with it. So let's now turn to equities and what to expect next from the S&P 500, which I use as my primary way to track U.S. equities. So this is a slide from my December presentation, actually one that Henry and I did together on what to expect from 2025. And it had this slide, and after we looked at this, we reviewed all of the reasons why I thought we had the potential for a bearish start to the year, a potential which we now know has since been realized, or at least partially realized. And I say partially realized because I think there's more downside ahead. So let's start by reviewing some of the things which led to those expectations for the year and then update them on what to look for next. And George is with me saying it doesn't look over yet. So here's another slide from a previous webinar, this one from the end of 2023, discussing what we were expecting for last year. And it was basically this: after finding support at a Voodoo fire line, right? Remember, major swings at many major levels. This was a multi-month move down into the low October of 2023, and we were looking for it to start a fresh Voodoo lines roadmap, right, to the upper fire line, right? Once we find support at one fire line, there are at least potential objectives at the next fire line up. So support at 4083 had us looking up towards 5925, a 45% move in about 14 months. But once we got up here, right, near that fire line is a tenuous spot. Highs in the S&P 500 leading to significant declines, and by significant declines I mean a significant um, pullback in price, and one that lasts for a long time before that high is recovered. They tend to come from major voodoo lines. Um, so this decline in 2018, right? It may not look like much because we've been so up so high since then, but this was a 20% drop in the S&P 500, and it wasn't recovered. We didn't get back above the fire line that it turned down almost precisely from for another 7 months. The COVID decline in 2020 came right from a voodoo tree line, right? And it lost 35% as it came right down into a fire line and reversed. And um, oh gosh, what was that? That was nearly 6 months before the high was recovered. This 2022 decline lasted 2 years, and we lost 33% in the indices, right? Right down from a voodoo tree line. So while support above these important levels is a bullish sign, reaching up to those levels and not getting clearly beyond them is a warning sign. So when our 2024 upside objective for the S&P 500 was met late last year, it left the indices susceptible to a decline. It did um, it did dance around the fire line for a few months, but not turning down crisply like we um, right. It danced around it, but we didn't see. At least it was a while before we came through. It wasn't a crisp, pretty precise term from the level. Never right. Nevertheless, I'll stick with the Pete Townsend quote on here. You know, it really sometimes looking for running out of gas at major levels. Sometimes trading really is that simple. Right. So there, um, 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 there are a few other things to look at here, right? We haven't yet talked about these lilac colored skylines, right? These, um, right, just like the fire lines are the most important, tree lines are the second most important, the white snow lines are the third most important, and there's a fourth most important level, right? There are more of them, but they are less important. So one level of importance less than the snow lines. While the S&P 500 was oscillating to either side of this important fire line level, right? It never really got outside of the first skyline above it, nor the first skyline below it. This was one clue that we weren't getting far away from the fire line. And so while not getting below it initially was a warning sign, not getting above either kept us near that important level. And as I said before, susceptible to some tops. Now, there were as we stayed close to this level, there were mounting signs of a possible top, right? There's this blue line, right? This is cumulative NICE breadth. And one of the reasons I have it on one of my charts is that cumulative breadth divergence is a signal which is uh, a, a pretty reliable sign of market topping action. Cumulative breadth divergence comes when we're making higher highs in price, but lower highs in the cumulative breadth line, which is exactly what we saw, right? I also use this oscillator down here. It's a newer tool I've built, right? The big picture oscillator, and you can see that it was overbought right when we were making all-time highs in the index. And while that wouldn't necessarily tell us that we had a long-term top in place, it certainly said that this is not the spot to be buying that we want to buy when we're closer to oversold, like we were last week. But in any case, with all these warning signs, and then with the S&P 500 coming back below the fire line, right, um, right on the heel of those warnings, I was actively using the break of that fire line to short the market. So I am out of those shorts now, but let me show you what I was doing, right? I literally shorted right as we broke the fire line back here on March 3rd. I just shorted the ES futures at 59.22 and 3/4, right? Um, and at least some of that short I kept on all the way down into the low last week, right? So let's walk through that because I was still right once we come down, once we break that fire line and establish a bearish voodoo lines roadmap, then we want to look for levels to be resistant. So when we bounce into a skyline and start to turn back down, that's the spot to add shorts, right? Make a new low for the move, and I'm going to scale out and just use a subsequent bounce to do the same thing again. Bounce into a skyline, show resistance. Remember, we're on a bearish roadmap down from the fire line. As long as we run into resistance at a level, use it to get in, right? Book profits as we come down towards a snow line level that could be support, and once we make a new low. Now, once we get through the middle of the move, right? Middle of the move tends to be the sharpest, right, and the easiest to get in. And once we get to the edges, then I'm less interested in adding more, starting to think about scaling out. We come just shy of this lower snow line at 54.90 and start to bounce. Yeah, I'll take off a decent chunk of what I've got, right? Scaling out of some of the original entry in at 59.22, right? Out at 54.32, not quite 400 points, but close, right? And then, right, so that was last Thursday coming up from the low, and then we gapped up Friday, and I just took off the last runners that I had, and I took this capture of the chart to build the slides. Yesterday, after the close, we are back above this 56.57 Voodoo snow line right now. So while there may be more opportunities to short, we'll look at those in a little bit. Now, let's talk about where, right? So that's how we got to here, right? Let's talk about what to expect going forward. I don't think the decline is over from the all-time high, and um, and sounds like George doesn't either. So Deb, we do. I don't trade ES every day. We um, um, Henry and I hang out in the Voodoo Mastery Room. I trade it when I've got stuff to do. Now Neil is with us there every day, and he has some levels and trade insights he gives every day. But I do certainly like to trade the ES, as you can see. Um, yeah, and Karen, great question. I'll try and get most of the questions later, but um, but one of the things that I try and do is to integrate my different tools. So um, while my move up that I was expecting in the S&P 500 into the end of last year was to look to the upside to a fire line, right? And it's different in gold. My view here in the for what to expect next as we walk through it. I'll jump ahead and then we'll get back to the full description. I'm actually looking to come down. Whoops. Back to the right slide. I'm actually looking right now towards this 5222 tree line in the S&P 500. Now that is a combination of the Voodoo lines and the Elliott wave view and the Fibonacci view, right? And like I said, you can combine this with whatever you use, and whatever you use can also be, hey, let me get David's idea of what he's looking for a roadmap. Sometimes it'll be right, sometimes it'll be wrong. But one of the nice things about combining the Elliott wave and the Voodoo lines is we have objective spots where we're wrong, and sometimes that can make all the difference. So as we go forward, right, Elliott wave is one of the things that's telling me to look further down. It tells me that we shouldn't end a move as a single sharp leg to the downside like this, right? There are some times that could happen, and that's why we were looking for that possibility in gosh, was it 2016? I can't remember, but we were looking for the COVID decline because of how price moved up ahead of it to end as a single decline. But that's not what I'm looking at and looking for here. I am looking for this to end as a zigzag, a down, up, down move, right? Um, so that's the first piece, right? Um, and because of that, and because often I'm looking for the second leg down to be similar in size to the first, it will depend on how big a bounce we get in here. But um, but if we bounce up towards the underside of that fire line, which would be a very common thing to do, then roughly equal legs down would measure into that 5222 Voodoo fire lines, Voodoo tree line area, right? Maybe a little above, maybe a little below, but somewhere near there. And if we get near there, then we have a level to work against as support. Now, as always, we can use the Voodoo lines to establish some if this, then that management scenarios. So if the S&P 500 takes out the 5222 tree line and doesn't quickly recover, if instead it takes out this August low and keeps going, well, then we very well may be in a much more bearish roadmap. Well, I would find it a whole lot easier to manage asking the question of, gosh, is it going to break and I want to still be in? Or are we going to turn up and I want to get back out? If I've entered a short from here and we come down here, rather than just be at that level and figure it out, right? So for now, right, this is I'm looking roughly for support around here. That would be consistent with the Elliott wave view. It would be consistent with the Voodoo lines view, and it would be and as long as things keep going the way we're looking at now. Um, Even if you missed the short for the first 10% move down, there's still time to get the voodoo lines on your chart and use them as guidance for the next leg down, right? Beyond that, there's still a little bit of uncertainty. At least it wasn't, it was at least a little uncertain as I was planning this webinar, and we had only bounced a little bit from last week's low. I wasn't sure whether we were in the first bounce yet, and I'm leaning more towards that idea now. If we can continue directly up above above Monday's high, and kind of up above roughly that area. Right? But otherwise, if we don't, if we stay below it and roll over, it's still possible that we're in this first leg down and get this larger bounce later and then come back down. But either way, I still expect a bigger bounce at some point, either unfolding immediately from last week's low or from slightly lower, maybe down towards 5,400 or so. Um, Now, between the fire line and the tree line, these snow lines offer some guidance. And as I mentioned, we're back above it. We'll look at some live charts um, a little later in the day, but um, but above both of them, and I will leave room for the larger bounce to be unfolding now. And if it does, watch this fire line. If we get up and up to it and turn down, that's a short, right? If we get just a hair above it and come back down, particularly if we then establish resistance below it, that's a short, right? Um, if we get up shy of it and start crashing those those snow lines, that's a short against the swing high that preceded the turn back down. Support above it, and we hold off looking to short, and we're likely still in a bullish roadmap, right? Um, so these are the guideposts I'll be watching to figure out when to short again, or if something else happens, whether to hold off on doing so. But for now, as I said, I'm expecting lower, and then after we get that additional downside later in the year, looking for higher. Now, arguing for the idea that the first bounce could be underway now as opposed to later is just this big picture oscillator that we looked at earlier got to oversold last week and is starting to come back up. Should be up a little bit more yet today. Yeah, MA. If it follows the right Elliott wave view, this bounce should be either a three-wave move or a combination of multiple three-wave moves. So yeah, for sure. Um, and yeah, if we take out the snow lines, for sure, George, it'll be Katie bar the door kind of time.
I've fallen and I can't get up.
Uh, just to insert a little levity into into our little discussion. So, look, I don't want to ignore this slide. I don't want to get caught up in politics, and I don't want this to be political at all. I've found that the easiest way to destroy my account is to trade on what I believe politically as opposed to what I see on my charts. But one of the things when talking about what to expect in from the market this year, right? I often get asked, how is it possible to anticipate what the market's going to do when it seems to be reacting every other minute differently to tariffs being on, tariffs being off, negotiations to allow this sort of thing, and that sort of thing, right? So I'll tell you that that I know we can do it because we did it before. if you were trading during 2018, um, you saw this. If you weren't, right, you might not have been watching the news on tariffs and other things that closely, but we were seeing exactly the same stuff that we're seeing now. The very first tariffs were early on China were early in 2018 on washing machines and solar panels, right? Um, the selling that ensued, right? It started based on the market being nervous about those tariffs, but there were other things going on that set off a chain reaction. This was that tariff fueled move down early in the year. Um, Basically put a squeeze on short volatility traders who were big into this short VIX trade. There were even ETFs that did it and all that sort of stuff. This was that Volmageddon, but it was kicked off by tariffs. Now there was an eventual recovery, and then we added tariffs on to more things, and then we recover that and escalation, and it starts to get significant retaliation down here, right? And then the market sells off too much, so we get a tweet that says we're close to a deal with China, and then China puts out a statement that we're not close to a deal, and it's back down. That was 2018. Now, 2018, this was part tariffs, wiggling back and forth, and part Powell. You can see today we've got tariffs and Powell controlling the market right now, and we're able to do it because even with that, support and resistance still worked even as the trade war escalated, right? Resistance like the fire line up near the high in late 2018, right? And resistance at a tree line up before the COVID decline, right? Which was it got lost in all the COVID news, but it was actually early 2020 when we finally signed a tariff compromise deal with China, right before we came down and bounced from the fire line. Right. So the point here is not to catch every wiggle, but to stay aligned with the broader trend, to not get constantly chopped up and turned around with every bit of news flow. And by having good levels at the right places, we can do that again with the current news flow. And we're already seeing how the levels are helping us get a handle on the decline that we're in imminently, right? So you already know from some of the trades which Henry showed you that Voodoo lines also work with some individual stocks. I love trading Amazon with the Voodoo lines. It is very crisp with them. Last August, right, um, there were signs that the market was turning back up after a decline from the July highs, right? And with signs that the market had finished its decline, I was looking for stocks to buy, and when I see that the market's turning up and that Amazon is holding its fire line, I want to buy it, and I bought it just above, right, at 167 and 67 cents, right, and and it followed a roadmap first up to, right, and then through the first tree line, right, and eventually up through the second tree line. And once you get that, right, once you get above the intermediate major levels, you definitely look for follow through to the fire line, even though, right, it was looking pretty good initially, getting right, turning up from a fire line with that as a broad objective. So look, I didn't sell right at the upper fire line. When we do trades like the one Henry was showing you earlier, right? Some of the ones in Apple and things like that, I lock things up um, right when right when we get to spots here. You know, I waited for it to come back down a little bit, right, to come through this voodoo snow line on the downside, and then closed out a bunch of my Amazon at 226, right? So um, so what is that? Just just under 60 points, right? A little more than a one-third gain, um, and that's you know that's pretty nice. More importantly, right, getting out before the market um, um, before the market fell apart. Right. So I gave it room to continue up if it wanted to, but once it broke the snow line, it was time to get out. This chart is also an example of what I mentioned earlier about using voodoo lines with whatever tools you want. So so while my Amazon trade was informed by my Elliott Wave view, not my Elliott Wave view specifically of Amazon, I don't find it useful to do Elliott wave work on individual stocks, but right, my view of the overall market turning up, right, even though that was underpinning my desire to buy Amazon at a support level, Henry trades more based on the squeeze in combination with voodoo lines. And you can see right in here, right, a nice little squeeze forming. Even if you didn't grab Amazon right from the lower fire line like I did, once you get above both of these tree lines, there's a clean path to that upper fire line. So, um, so based on that, it's clearly tracing out a bullish roadmap. That's a strong bullish sign, as strong as whoops being above stacked moving averages as we were, right? So what Henry likes to do is say, let me find these squeezes that are roughly 5 to 10% away from a major voodoo line level in a bullish roadmap, and use that as a signal to get in, and boom, right, up to up to that level, take your profit, go home. So so um, there are many other ways that you can use these things in combination, and I'll be walking through those and how to build roadmaps and use it with other tools in a class next week. But by now, I hope you see the value in not only having good, reliable levels, but levels which also can give you a roadmap because of the systematic way that price moves between them. More important, perhaps, hopefully you can see why so many of the traders at Simpler Trading have relied on Voodoo Lines roadmaps for over 12 years, and why I'm using them to guide my trading plan and my trading roadmap for 2025. Ever since these were introduced by Simpler in 2012, Voodoo Lines have been a premium priced indicator because of the power. But but since 2012, price hasn't gone up. Unfortunately, hasn't gone up until now. The office just notified me that April 1st, they're going to be raising the price of the Voodoo lines. Um, I'll take you through a few more charts in a minute and take some questions. But before that, for those of you who want to lock in having the Voodoo lines on your charts to follow the 2025 roadmap, you can still do it at the 2012 prices. Actually, you can do it at a discount to those 2012 prices with some of the bundles that they've put together. right? Um, so the base price of the Voodoo lines is 997, right? This basic bundle here, right, for 1097, just $100 more, right, includes not only the Voodoo lines indicator, but the Voodoo lines subscription. I'll tell you what that is in a minute. The class I'll be doing next week, talking about how to trade with the Voodoo lines, all of our prior recorded Voodoo lines uh, classes, right? So you're basically getting that subscription for free. If you want to bundle it with the Voodoo Mastery, where Henry and I are, for an annual subscription, it's even more of a discount, and that'll just give you right the daily plan following the roadmap and what I'm looking to do every single day, as well as Henry's thoughts of the day. So what's this Voodoo Lines subscription, right? And there's a question we had earlier, and Lorna helpfully posted a link further up about what about the symbol list for the Voodoo lines. You can also get to it by just Googling what symbols are the Voodoo lines currently on. And you'll get to a page with that PDF, right? But the base Voodoo lines works with most of the major U.S. indices, the S&P, the Dow, the Nasdaq, the Russell, right? Index futures and the index ETFs, a bunch of commodity futures, some select forex pairs, and some individual stocks with a subscription, right? So as I mentioned before, the Voodoo lines are stable for long periods of time, usually years, sometimes decades. But the levels for just about every symbol will eventually need to be updated. All of the charts need to be constantly monitored to determine if an update is needed. So that's work I'm doing day in, day out, every single week. The optional Voodoo line subscription is for traders who want the levels for individual stocks. If you just want the indices, futures, et cetera, the updates on those, which because there aren't as many of them, we have hundreds of stocks, which you'll see if you go click the link that Lorna posted for you, or grab stuff here. Um, um, or Google for stuff, right? You'll see there's several hundred stocks. The last update, George, I believe, was February 24th for the one with stock update. It's usually once or twice a year for just the base level. Um, um, so um, So that's what. So the subscription, like I said, is if you want the individual stocks. So if you've got the base package and want the individual stocks, right? Never got it, or if you had it and it lapsed, there's a discount for you as well, right? A package that has a year of that for a discount, plus includes a trial to that Voodoo Mastery. And of course, everyone gets, who has the indicator, gets the upcoming class next week. If you want to do a full quarter in the Voodoo Mastery, there's that version as well. So if you've got the indicator, if you're part of the mastery, either way, you get into the class we're doing next week, talking about just going into a lot more depth about how to build those roadmaps, how to use them to construct trades, all that sort of stuff, right? So that the elite package, for those of you who don't have the indicators yet, I know there are a bunch here who already do. Right, the elite package includes not only the indicator, but a year of the stock updates, the class and a year in the Voodoo Mastery, where, as I said, every day I talk about where we are in that S&P 500 roadmap, updating things. Henry gives his thoughts for stocks to trade, um, and all of that sort of stuff. But as I said, April 1st, the price goes up. And right now, you can get a discount on this stuff. So this is one of the most used indicators at Simpler Trading. Um, Not only do John, Henry, and I use it, you know, Neil uses it, Cody uses it, Bruce uses it. Everybody looks at these levels for reference points for important levels that are going to be hard to get through, and this is the last chance to get in um, uh, get in the 2012 prices for these things. So the mastery, right? As I mentioned, that's Henry and I are there every day, chatting all day long. I alert out every trade I take in my portfolio. There's the package again. I know Mary wants the phone number, which will be up in just a second, right? Um, uh, if you want to finance it, there's PayPal credit, but that phone number is 512 266 8659. So I want to be um, I want to be clear, Sanjay. Right? You can when you can't back test an indicator. You can back test a strategy, right? But you can't back test just an indicator, right? So so the voodoo lines, right? You're going to want to combine it with something. I can show you how I've combined it and what my results have been. But remember, past results are are not any indication of future profits. What I can tell you is people keep using this because it works, right? Um, and because the levels come into play. But it wouldn't be, you can look backwards on the chart and see, we can, or I can bring up the charts right now and we can look at this um, interactively. Let me get a different chart also, because I want to update with the latest S&P 500 here. Um, we can come back to um, to the weekly, or we can come over and look at it on gold, right? And again, we can see how these major swings have all come into play at major levels, right? That is, of course, a form of back testing, right? Yeah, so Pierre, we're really talking mostly about the classic voodoo lines. The micro voodoo lines, for those who are not familiar with them, are designed for day trading. Now, the roadmaps that we're talking about work just as well for the micro voodoo lines, which are levels which are much closer together, right? Designed for short-term intraday um, um, short-term intraday trading, right? So we're looking for small wiggles, right? Down, here to here to here to here to here to here, right? That's and perhaps working our way up to 5781 in the ES, right? So we build the roadmaps the same way, fire line up to an upper fire line with important intermediate levels in here, but um, they're not really applicable to because they change much more frequently. They're really designed for intraday traders. They're really don't fit with the topic of today's discussion, which is more about what's our big picture view for the whole year, right? Um, these are what's my view for today, right? Um, so with that, let's come in and take a look at today's action where we have climbed above the um, um, the high from Thursday. So I think um, uh, and only by a little bit, and we're getting a reaction there. But I do think that this is an indication. Remember, we talked a little bit more big picture about it being not as clear as I would like whether we're in that first big bounce um, before another leg down towards this 52.22 area. I think based on action we're seeing now, looking up at least a little bit higher, right? And then if we come in and we take out yesterday's low, I think that's a short against whatever the swing high is, right? But looking at this to now be that bigger bounce that we are in the middle of. So we'll keep an eye on that. I've got um, folks in the mastery are in this one, right? This one um, being the euro. This is a weekly chart, so we're kind of zoomed out. But again, you can see this fire line to fire line roadmap, right? Here, the low back here in 2022 came from a tree line, but you can see pretty precise move from tree line to fire line, and then back down to a fire line, back up to a fire line, back down. This low was not right at a voodoo line, but early this year, let's zoom in. You can barely see the price action with all my scribbling, right? Early this year, we started recovering. I thought we were going to come back above this fire line and head back up. And ever since we have been above it, it's been racing upwards. And I think we're aimed at back above the 2023 high. This has already run a good bit. I would look for a pullback into support before doing anything. Um, but um, um, but I'm looking yet higher in the euro, minimally to above this 2023 high at the fire line. And if it finds support above there, maybe it can keep going, right? A lower dollar, which would correspond with a higher euro, would mean higher asset prices, at least be a tailwind for asset prices, anything priced in US dollars. That could be a tailwind for gold if that keeps going up. Remember, we're looking at the idea um, 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 that the idea that the S&P 500 will eventually turn back up bullishly from that 52.22 area that we talked about, as long as it doesn't go well beyond it and start taking out this uh, uh, this August low. So that's what's going on there. A few other names that I've been looking at. When we started to turn up, um, when we started to turn up last week from Thursday's low, I also looked to buy some individual names that looked like they were at support, not for long-term holds. Remember, I'm expecting eventually back lower, but one of the names I bought on Friday was Goldman Sachs. Right, these are not the right levels for Goldman Sachs. Let's get them. Right. So again, we started turning up last week. Goldman was near a fire line, and so good follow through this week. Good upside today. So I'm happy to own more Goldman. Just showing you ways that I'm doing stuff here in the current market conditions. But if you guys have any other questions, um, please let me know. Um, yeah, John. No, if you just want to keep your subscription, that's fine. The only the only thing that you might consider doing is just giving a call into the office, because some of these things are discounted. So if you wanted um, um, uh, to do one of those, switch to an annual plan while things are on sale, then uh, then that you know rather than paying $47 a month every month, you get you only pay for 10 months a year if you do it on an annual, and you can get even more off right now. Again, just a way to perhaps save yourself some money if you plan to keep being subscribed. So Deb is asking, does it work on crypto? It does with a caveat. So here is that caveat. First of all, your platform needs to have crypto on it if you want to plot the Voodoo lines on spot crypto. Now, on other platforms, we've still got the Bitcoin and Ether futures, right? So you can see what was at the time an all-time lasting high at a tree line here in 2024, down to put an inverse head and shoulders at this fire line down here for heading up and making the latest all-time high at a tree line. So like we talked about, making the more important swings occur at the more important levels and giving us a roadmap to work with. So right here at 87,000 and change in the Bitcoin futures, right, is an important level. If we can get support above there, maybe Bitcoin is finally recovering. I think it could see some more down. I'm out of Bitcoin for now. Certainly, so long as we're below that level. But the short answer is yes, it works on the Bitcoin and Ether futures, on um, on TradeStation, TradingView, on Toss. For spot crypto, we've got spot Bitcoin, spot Ether, a few others. I think we've even got Doge on TradingView, and a few on TradeStation, which has spot Bitcoin. Um, Yeah. So Terry, if you have the micro Voodoo lines, um, everything is on sale, but they can certainly work through and see what the best package is. But you can certainly get it for less now than you will at really any other time. Um, what else, folks? Um, Anything else that you want to talk about the market? We are coming back a little bit more in the S&P, so maybe maybe the chairman said something that um, that the market wasn't thrilled with. And I don't love the spot that we're coming back down from. This may be doing some weird wiggling in here. We may come back below here and back above here. That's the kind of price action um, that we often um, see in here. Um, so the question: what about the DAX? If that is um, um, a question about whether the the levels work on the DAX. It's going to depend on whether you're um, um, why is the DAX rising and rising? Oh, it's very simple, right? The German government said we're to heck with this austerity thing that we've been doing forever. Um, we're going to go out and finally do some deficit spending, spend some real money on defense, spend some real money on infrastructure, and the German market, which has a lot of staples, right, a lot of industrials, not quite as much tech, right. I mean, there are some tech firms. I was making some good money in SAP a little bit ago, but you know that they love it, right? They love the fiscal stimulus, right? Which is what effectively that is. So that is why um, um, the German market is getting a kick in the rear end with some real movement. So look, this could get a little sloppy over the next few days. Keep an eye on these Voodoo lines levels, right? Particularly this 56, 57 snow line down here. We may need to get a little twitchy on either side. DeFi, I think Henry has already run on. He has another broadcast he's got to get to, but um, um, but yeah, just follow along with what Henry's doing every single day. He integrates those levels together. But thank y'all for spending a little bit of time with us. Again, um, uh, if you need more, just call into the office. You can hit the link there if you want to pick stuff up. And for those of you in the masteries of the trading rooms, I will see you all soon. For those of you picking up the Voodoo lines or who already have it, I will see you at next week's class. And thanks, as always, for letting me visit with you for a little bit. And I will see y'all soon. Until then, as always, good trading.